Hi everyone, my name is Piterpakulski. Today we will continue creating a financial model for a store from scratch. Today we'll show you how you can create a cash flow statement. If you find this video valuable, you may give us a like, subscribe our channel. Also, you can order a financial model from scratch for your business idea or for your existing business to see the clear picture of it, of the revenues, expenses. And what is valuable about the cash flow statement? Cash flow statement is the main table where you are able to see how much money you need to start your business, when you need this money, how the revenues grow, what is the cash balance at this or that time or inside the timeline. Is there any cash gaps inside your investment project? And cash flow statement is the main statement where the decision itself is made whether to start or don't start this or that business idea. So this is the core of the business. So the first statement you need to make a decision whether to start or not this or that business is a cash flow statement, because all flows, all revenues, all expenses go inside this table. And now I will create this table. So this form is 99% automatic. We don't put there any data, so it's all about formulas. Except one exception may be equity, but equity we can also automate. So I will create the cash flow statement right now, and you can do it yourself. So let's don't waste the time and start. So we just take the timeline. So first of all, we start with revenues. So to create cash flow statement, we just search inside the model for this or that parameter. For example, revenue we take from here. Now we work with direct costs. Now we take fixed costs from the block above. So we take all red lines that we've created already. So we just search inside our model for the red lines. Now we work with payroll. So as you can see, this form is absolutely automatic. We don't put any manual data here, because when you put something manually, each time you will create different scenarios, you will forget to retype the data, you will make mistakes, you won't be able to see the right amount of financing. The next block is taxes. For taxes, for calculating taxes, we will insert a block. Here we will type the name of the tax, here rate, here tax base, here will be revenue tax, then profit tax, for example, then payroll tax, so here we will set up revenue tax. For example, it will be percentage. For example, it can be 5%. Profit tax, for example, it can be 3%. Payroll tax, for example, it can be 7%. Asset tax can be, for example, $1,500 per month. Tax base will be revenue, revenue, profit, payroll. This is the input, so we mark it with our unique color that goes with all of our inputs. I will get back to this block a little bit later. So taxes we take from here. So we take revenue multiplied on the tax rate, we fix it, profit tax we will calculate a little bit later. Payroll tax, we take payroll, multiply it on the tax rate, then asset tax, we take this value, and then we will multiply it on 0 or 1, whether we have or don't have operating activity. So here we have chronology on the top, and we have this line operating activity. 0 means that we don't have, and 1 means that we have. We do have an operating activity at this moment. So here it starts, and we just multiply this tax on this line. Now I will extrapolate this formula to the right. Now we calculate the result from operating activity. So we take revenues, minus direct costs minus fixed costs minus payroll minus taxes So here is result from operating activity. Now we move to investment activity. In items we take
from this table.
So now we'll extrapolate this formula. This will be our investment plan. Here it is. Now we move to financing activity. Equity may be the only manual line in our cash flow statement, so we marked it with blue color that goes with all our inputs. Now we go to the loan. When we take it, now we add interest rate payment and principal payment of the loan. Now we create the line for result from financing activity. This plus this minus this and minus this. Extrapolate. Now we create cash balance at the beginning of the period. And cash balance at the end. So what we do, we take the result from operating activity plus result from investment activity plus result from financing activity plus cash balance at the beginning. So this will be our cash balance at the end of the period. Then we move this value here. This will be our starting cash balance at the beginning of this month, of the next month. We take this, then we move this formula here, and then we extrapolate. So this value moves here, then we take this value plus operating, investment and financial activity, and here we can see our growing cash balance. It can increase, decrease, it depends on the project, it depends on your business idea. So this is the heartbeat of your investment project. So here we've created the cash flow statement. Now it's time for us to calculate the profit. We forgot about our profit tax, so we will take this minus 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 this. Now we extrapolate this formula to the right. Then we go here and write a formula with if function. If net profit is less than equal to 0, then 0, otherwise we take this net profit and multiply it on the tax rate. Tax rate we fix like this. Now we've created the cash flow statement, and we can just group the data So now we can hide all the data, all the detailed information. And see our business in this very small table. We can see the revenues, expenses, result from operating activity. We can see our net profit growing. And now the topic of our next video will be calculating the amount of financing that we need to start our business idea. So if you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order financial model from scratch for your business idea. So see you next videos. Thank you and bye.